What if you could actually just bet on the future? Not just on sports, but on elections, central bank decisions, or even whether Ethereum crosses $5,000. And instead of odds being set by a sports book, the numbers are shaped by people putting their own money on the line. My name is Danilo, and today we're going to look at the rise of prediction markets, the opportunities they create, the cracks in the system, and whether they're here to stay. If that sounds interesting to you, make sure to hit that subscribe button and ring the notification bell so you never miss future crypto updates. Alright, let's get into it. Prediction markets have been around for a while, but crypto has given them new life. At their core, they let people put money on real world outcomes. The idea is quite simple. If you think something is going to happen, you buy yes shares. If you think it won't, you buy no shares. When the event is resolved, winners get paid out. It's a straightforward concept, but the twist is that the price of these shares reflect the probability the crowd assigns to an outcome. In other words, when money is on the line, markets can act like a signal of what people believe will actually happen. This is where platforms like Polymarket and Myriad come in. They run these markets on crypto rails, meaning anyone with an internet connection and a wallet can participate. You can bet on whether Ethereum will hit new all-time highs, how much the Fed will cut rates by, or even the likelihood of certain airdrops happening. And it's not just Web3. Regulated competitors like Kalshi are entering the space, trying to capture the same wave of interest but with a more traditional finance approach. Vitalik Buterin calls this info finance, and it captures the essence of why these markets actually matter. They aren't just about gambling for fun, they're about creating a tradable signal around information. Instead of reading another poll that might be skewed, you can look at where millions of dollars are actually being placed. If the crowd thinks Ethereum has a 70% chance of hitting $5,000 this year, that number comes directly from traders willing to risk capital. Different types of people get drawn into these markets for different reasons. You've got the Degens, who love betting on meme-worthy events like celebrity drama or cultural moments just for the thrill. Then there are the quants, who run bots and algorithms to sniff out tiny inefficiencies and lock in risk-free gains. And finally, there are the casuals, who might drop 10 to 20 bucks on a political event just because they want to test if their instincts are right. Together, these groups keep the markets active, but they also create very different incentives that shape how accurate and trustworthy these predictions can be. At the end of the day, understand that prediction markets aren't just about entertainment. For traders and investors, they can serve as real-time indicators of crowd sentiment on politics, economics, and crypto. And if you're paying attention, they can tell you where the market thinks things are headed before the headlines will catch up. If you look at the traditional world, prediction markets are already familiar through platforms like DraftKings or FanDuel. These companies let you bet on sports or specific outcomes, but every market is siloed. DraftKings has its own liquidity, FanDuel has its own, and the odds can vary depending on where you play. That fragmentation makes it harder for bettors to find the best price, and it limits how big any single market can get. Now, for a second, let's compare that to Web3. On platforms like Polymarket or Myriad, prediction markets are created on-chain, and the liquidity is unified. That means if there's a single market on whether the US election goes red or blue, it doesn't exist on a dozen separate silos. Instead, one canonical version of that market sits on-chain, and multiple apps or interfaces can plug into it. Every trader is drawing from the same pool of liquidity, which makes spreads tighter, markets deeper, and odds more transparent. This difference might sound small, but it's huge for accuracy. In Web 2, if you see different odds across platforms, you can't really be sure which one is quote right. In Web 3, the market itself becomes the truth, because everyone is tied into the same numbers. And since it's all on the chain, anyone can verify the trades, the volume, and the current odds without relying on a middleman to publish them. Even regulated players are starting to recognize this. Kalshi, which already runs as a US licensed exchange, recently launched an eco-hub with Solana and Base to explore how blockchains can power parts of its system. The fact that a regulated Web 2 style exchange is leaning into crypto rails shows how powerful this model is. They might be competitors on the surface, but they're borrowing from Web3 because the infrastructure is just simply better. For you, the viewer, the takeaway is quite clear. If you want the sharpest odds and the most transparent markets, Web3 platforms are where the real innovation is happening. Web2 companies might have regulation and scale on their side, but It's crypto native markets that are rewriting the rules. If you want to know whether prediction markets are just a niche experiment or something much bigger, follow the money. Over the past year, investors have poured hundreds of millions of dollars into these platforms. Polymarket raised about $200 million at a $1 billion valuation, while Kalshi raised $185 million at a $2 billion valuation. That's not just play money. These are unicorn-level bets from serious backers who believe this space has room to run. And it's not just fundraising. The trading volumes are massive. In September alone, Kalshi processed more than $1.3 billion in turnover. Just to put that into perspective, these numbers rival the activity on some established betting platforms, and they show that users are already treating prediction markets as a legitimate place to put capital. What's interesting is that Web3 isn't just growing by skating around the regulation. Polymarket was banned in the US back in 2022 for compliance issues, but it recently acquired a licensed clearinghouse called QSEX. That deal allows it to operate legally under CFTC oversight, meaning Polymarket has re-entered the US market through a front door. For a platform that was once considered underground, that's a major shift towards legitimacy. Venture capital firms are also circling because they see an opportunity to own the first movers in what could become a new financial primitive. But it's worth noting that their motivations aren't always about immediate profit. A lot of this money is chasing attention, user growth, and regulatory first mover advantage. Investors want to back the platform that sets the standard, not necessarily the one generating the most revenue today. It's clear that prediction markets have already broken out of the experimental phase. The money, the users, and even regulators are starting to line up. That doesn't mean every platform will succeed, but it does mean that this category is being treated as more than just another crypto fad. Of course, no market is really perfect, and prediction markets have their share of cracks. One of the biggest issues is inefficiency. Researchers recently found that on Polymarket alone, mispricings created more than $40 million in quote free money over a single year. And in some cases, the prices of yes and no shares didn't even add up to a full dollar, letting traders lock in guaranteed profits. In others, logically connected markets had wildly different odds. And for sharp traders running bots, these inefficiencies are a goldmine. But for casual users, it means you're often betting into markets that don't fully reflect true probability. Another challenge is manipulation. Because these markets are often open and sometimes very lightly regulated, whales can come in and swing the odds by placing massive bets. That doesn't always mean the prediction is wrong, but it does mean that the signal can get distorted in the short term. If you're using prediction markets as a guide for where politics or crypto is headed, you need to know that not all price moves are organic crowd wisdom. Sometimes it's just one really big wallet pushing the numbers. Then there's regulation. Even with progress like Polymarket's comeback in the US, the legal landscape is still a little messy. Kalshi, for example, is currently facing a lawsuit from the state of Massachusetts over whether its contracts violate gambling laws. And that's just in one state. Globally, some countries allow prediction markets quite openly, while others ban them outright as unlicensed gambling. Where you live can determine whether you even have access. The takeaway here is that prediction markets aren't always crystal balls. They can be manipulated, they can be inefficient, and depending on where you're based, they might even be illegal. If you're going to follow them, treat them as signals that need context and not gospel truth. So, with all this growth and all these challenges, the big question is whether prediction markets are really here to stay. On one side, the believers point to things Web3 does best: the transparency, open access, and shared liquidity. Instead of relying on biased polls or filtered media, you get a real-time signal of what people are willing to risk money on. In that sense, prediction markets can be more accurate than traditional surveys, because money forces people to think twice before committing to a view. On the other side, skeptics see real problems. Regulation is still unsettled, and the stigma of gambling hasn't gone away. Add in all the inefficiencies and the risks of whales distorting odds, and it's clear these platforms have work to do before they can claim mainstream legitimacy. Even with the growth we've seen, a lot of activity is still tied to big one-off events like elections or central bank meetings. Outside of these little cycles, markets can go quiet, and that raises questions about long-term demand. Still, it's telling that even regulated platforms like Kalshi are now experimenting with Web3 rails. The recent partnerships with Solana and Base show that the crypto model is influencing the whole industry. And when you combine that with forecasts projecting the sector could grow to $95 billion by 2035, it's hard to ignore the potential. Prediction markets may not replace polls or sports books overnight, but they're carving out a unique role in how people trade on information. If they continue to evolve, they could become the front page of the internet, a place where you don't just read the news, you bet on it, and crypto could be the backbone that makes it possible. So, are prediction markets the future of crypto finance, or are they just another fad? The truth is probably somewhere in the middle. Right now, they're messy. You've got inefficiencies that bots exploit, whales that can easily swing the odds, and regulators still figuring out how to treat them. But at the same time, you've also got serious money flowing in, platforms scaling into the billions, and crypto infrastructure shaping the way even regulated players operate. The real question is what happens next? Do these markets evolve into a mainstream way of measuring truth, a place where anyone can trade on information in real time? Or do they stay a niche product used by traders and crypto insiders? I'd love to hear what you think. If you found this breakdown useful, make sure to hit that subscribe button and ring the notification bell so you don't miss future crypto updates. Thanks for watching, and I'll see you in the next one.